lose yourself by becoming rich.
Take all your money, buy Bitcoin.
Wake up every morning and say GM.
GM. GM. Today is Wednesday, the 11th of September. Here we go. So, Bitcoin rejecting off the first major resistance here, which would be this daily breakdown level plus the bands. Zoom into a lower time frame. This is pretty much what you'd expect from here if there is any bounce. We have had a market structure break. This is an early reversal sign. We weren't able to even take out the highs before falling back down. Market's still weak. Sellers still want to sell. Question is this whole area here going to provide a level for the market to consolidate and go higher? Or are we going to fall below that and go lower? So I think they're the two paths you want to watch out for. Obviously, this initial path would be the expectation. If we bounce up, you're expecting a rejection initially. Question then becomes, if it pushes up and rejects, does it then hold in this general area and chop for a while, or does it lose here? I think falling back down below and filling back in this gap, which I mentioned on the 4-hour chart. On the 4-hour chart, we've got an impulse candle. And typically, when these start to fill, right, so the impulse candle left a gap, we filled it, it moved away, it's back in and filling it. This is a high likelihood, a high probability of filling the whole thing. And if that happens, well, failed bullish candles like this, when this one started to fill in back on Monday of 2 weeks ago, when that starts to fill in, it fills the whole thing in. Now that one ended up going lower. It doesn't have to go lower significantly, but yeah, failed impulses whenever they retrace tend to produce a move down. This impulse filled back in. We chopped around sideways for a while, but it was the top. This impulse started to fill in, filled most of it, we held and went higher. So there's always examples of it playing out in the other direction. But the likelihood, the higher probability would be that we end up retracing the whole thing. Now, this might just be as simple as what I mentioned a couple of days ago, where we pumped up again, people got too excited way too fast once again, and everyone was back on the we're so back train. I don't know, maybe we're just going to go down, take out these lows, and have our proper rally from there. Because I do think there are plenty of levels. There's one now here, there's one there, there's one there. There's plenty of levels at which Bitcoin can attack liquidity and have a nice strong rally. It might just come from one more low first. And so we'll see. That all remains to be seen. As for today, we've got CPI, inflation. So again, as always, I'll talk about that on Trade of the Day. Should be some good trading opportunities today. And I should probably do a live trading stream today again. I might do that. I might move Ask Michael to the earlier time so we can trade around the CPI. And we can talk through the market, what's happening, because there's a lot I want to talk about with growth and inflation and recession. And I think that the markets, there's plenty of things pointing towards some kind of economic downturn, more significant. And I don't know if the Fed are going to be ahead of it. So we should talk about that. CPI would give an indication into that today, so it'd be interesting to see how the market reacts. So, before then, what are we looking at? Well, everyone's talking about the debate. I've listened to like half of it. I need to listen to all of it to make my own opinion. I'm trying to listen to it as fast as I can on 2x speed. It's fucking boring. At least Trump has said some funny things, but, you know. I think the consensus seems to be that Harris won. That's because it's all rigged. It's all fixed against Trump, and the media are going to report that she won. But I don't think, from what I've heard at least so far, I don't think that's going to actually change any voters' minds. Yeah. Who's actually waiting to hear the debate to decide? I don't know. I think it's all just theatre. Politics is TikTok for boomers, as I say. It's just a dopamine trap to keep people distracted. So I don't think that, people are saying that that's the move. Oh, the coins are down because of that. It's not. I'm very confident saying it is not because of that fucking debate that the coins are down. Now, Trump's odds, the reason Trump has lost the debate is that his odds have dropped. But when Trump's odds were rising over the past few weeks, right, Trump's odds have been going from the low of 44 on the 16th of August. Trump's odds have been up to 53, up as high as 53, right, and has been rising for the past several weeks. And yet, crypto market has gone lower. Every altcoin's gone lower. Bitcoin's gone sort of sideways. So you can't selectively use these things and say, oh, well, whenever it suits my bias, it's all about the election. When it doesn't, it's not. I think what's actually more of a factor, two things. One is just very simple. The market was running up into the debate, right, and had left behind some gaps. So it had moved up into the highs. You're probably going to see an open interest increase into the highs. Actually, after the highs, which is more concerning. You see this over here. Initially, the open interest declined, as you see a bit of a short squeeze. When price was at the top here, you can see this. It's kind of slightly difficult to see, but you can see it nonetheless. When a market stops going up and goes sideways, and open interest increases, it's usually an indication that longs are entering, if it's after a rally. Price then drops, flushes out that initial set, and then we've now got another build-up again, probably as people are coming in to short it. You're probably seeing a combination of both. I think the main factor was the Japanese yen continuing its decline. So if you remember, USD, JPY, if you remember all the way back to just a few weeks ago when everybody was panicking about the US dollar and Japanese yen carry trade blow up, well, that's making a new low. So this move down caused the bigger crashes we saw 2 weeks ago, 3 weeks ago, and now it's making new lows again. So that's obviously a cause for concern. The further this unwinds and declines, the worse it would be for markets. If you look at how this unwind has happened, we have, it's okay if it pulls back, right? But since this yen carry trade is now being considered to be over, or has, as they term it, like blown up, you're looking to see potential for another deeper decline. So that's one to keep watching on. I'm still of the opinion that the worst has already happened and that much more is not going to happen beyond this, but there's still plenty of room for it to drop, right? You've an impulse candle lower, you've got the market rolling over. If it doesn't hold this support, you're looking at like 130 as a potential. And when markets decline like this, they tend to go on a very significant extended decline. People tend to underestimate the magnitude of these type of moves, but just go look at similar type of moves. Like, look at this move in BTC, right? Failed to go higher, has its first impulse sell-off, and it's at support, air quotes, and what happens? It unwinds not just that, but all the way. Imagine that unwinding all the way to 115, 117. Why couldn't it? This was all built off the back of a carry trade that had built up for years. Then the Bank of Japan, have raised interest rates, which basically makes this trade not profitable anymore, and so it has to unwind. And what is this actually in simple terms? People are borrowing cheap yen to buy things like American stocks and really other risk assets. That's all it is. The Japanese yen, the Bank of Japan had interest rates so low that you could basically borrow yen from Japan for zero, for fucking practically nothing, and use that borrowed yen to lever up and buy stocks and buy probably US bonds at 5% yield, and so on and so on. So if that is over and has to unwind, there's a lot of people who are probably over leveraged. The only thing that matters to you and me is that when trades like this reverse suddenly, it's a leverage unwind. And the reason why it affects stuff like crypto is because those people, you don't know where they are overexposed in other areas. There's always some form of a contagion, right? It's not about whether the Japanese yen is fucking down or up. It's about what are those people who are getting potentially liquidated or margin called on this trade, what do they have to sell to meet their margin call on this trade? And that's where you'll see them sell US equities and potentially crypto. And then crypto just has the correlation effect with it. You also see US government bonds rolling over, bond yields. So bond yields trending lower is good because that would indicate that we're moving towards expectation of further Fed rate cuts, and the lower bond yields are, the more attractive it is to hold stuff other than bonds. So like it's more attractive for crypto, it's more attractive for stocks. But if it's falling rapidly, like the US 2-year and 10-year is, that's an indication of potential growth scare, which is recession territory. If this falls rapidly, it's not a good thing. Right? The rapid falls happen during periods of negative action in the markets. And it's not, again, so it's like one of these things. This going down is good, because look, when this was going up, it was bad. Right? Simple. Throughout 2022, yields rising, markets were crushed. Going down is good, but if it goes down sharply, that can be an indication that we're going too fast towards what it wants to be. This is about the soft landing and hard landing. Soft landing is where inflation comes down, the economy cools off, the jobs market cools off, right? So unemployment does rise, but not enough to cause a recession. So if it's soft landing, which is like perfect for us and perfect for our bags, this will decline nice and slowly, step, all the way down. If it happens with more of a hard landing, a crash in the economy, I mean, and unemployment spikes and inflation drops towards deflation and a recession happens, this will also drop very fast. If a recession's coming, this is going to just stone drop straight to zero. Not to zero, but it'll drop very fast. But that's a bad thing, because if it's moving too quickly, it's a sign of recession. It's like what happened in 2008. You all know how bad 2008 was. Once the recession was pretty much baked in, collapse. Because you can't have high rates in a recession. Recession will push the Fed to cut rates significantly, fast, hard. But by that point, it's too late. Because if you've gone into recession, you've basically missed it. They're not ahead of it. So that's why this moving like this is concerning to traders. Because even though it's good for it to go down, if it goes down too fast, just like anything, it can have a deleveraging effect. Oil as well would seem to point towards that, although it's trying to bounce here and it's not broken any. Oil kind of looks like the dollar, the DXY, over the last couple of years. I mean, it's pretty much the same. So oil from highs of 80 just a few weeks ago. I remember everybody was talking about oil going to fucking $1 million a barrel because of war and blah, blah, blah. There you go. Oil and the dollar, pretty much the same thing. But again, oil dropping fast is what? Sign of massive slowdown, right? If oil prices are plummeting, it means there's a big growth scare. There's a slowdown, either in China or the US. So you can't really, it's hard to tell exactly where that is yet, but oil prices lower is one of the signs of a recessionary environment too. Obviously, during COVID, that was an exception where the whole world shut down. But again, lower oil prices are not bad. Like if it stays around the lower end, of this range, that's fine. But if it drops fast and hard, because, really high oil prices equals inflation. So you don't want that either. But, it's pretty clear here. This is 2023's value area, volume profile. This is 2024's that I had drawn out a while ago. So we've lost the value area low. So oil on the year is bearish for sure. For 2024, it's tried to go higher. It's now going lower. It would have to reclaim there. So these are all things that combine to produce what you would call a potential growth scare. And the market's getting a bit shaky about the prospect of inflation. So where does that leave us for Bitcoin? Well, if the recession fears pick up, you're going to look at lower prices. Very simple. And don't forget, we've been in, and we are in, a bearish market, a sideways market, choppy market, whatever you want to call it, but it's certainly not bullish. And if it drops down, there'll be reasons, it's recession, it's this, it's Trump losing, it's blah, blah. It's the chart. The chart's been like this. This should be no surprise. Bitcoin is, unless it's able to break market structure to the upside, unless it's able to flip the bands green, unless it's able to reclaim levels, it is just a bearish chart. So that's where it's at the moment. That's mostly what I wanted to say for this morning. I don't think that this is based on Trump's debate. I think it's based on more important factors. And you see this from like stock market reaction. Stock market, which probably would react more intently to the debate. Debate happened at 1 a.m. Here you had initial spike down on the debate itself. Went a little bit lower, came up. So in the futures markets overnight for stocks, basically just sideways. They're not reacting massively to the debate itself. So let's see what happens once we get into New York session, once we see CPI, and once we see what's happening today. And that's about it. But we did have a full day of trading yesterday. I want to see what the ETFs did, because there was a slight inflow on Monday. There was more inflow on Tuesday. Let's see how that continues throughout today. That's it. GM, GM, GM. I will go live at 12:30 UTC to react to CPI inflation numbers and possibly trade it live as well. GM.